Education-focused publishing house S. Chand and Company is looking to raise about 728 crore through an initial public offering, with the offer scheduled to open tomorrow and to close on the 28th of April. Yash Jain caught up with the management of the company and began by asking how they plan to use the proceeds and their outlook on growth going ahead.
The maximum proceeds around close to 255 crores would be used to reduce the debt of the company. Plus there will be some general corporate purposes account, and plus there will be some IPO expenses out of total 325 crores.
A major portion of the IPO proceeds, as you said, is being used to repay loans which the company has taken. Can you help me understand the total debt of the company today, and with the deployment of the IPO proceeds, what is the target in terms of bringing down the debt?
So as per, because we don't have the audited balance sheets as per now, but as per my estimate, the debt of the company is above close to 300 crores. And if we are able to repay the 255 with the IPO proceeds, so our debt would be in the range of, I would say, anything between 50 to 80 crores of debt would be there. And that's mainly the working capital debt. That also in next 3 to 4 months will be also reduced, because as company has a maximum business in the Q4 and the money starts coming in after that in the Q1 and then Q2 and then Q3, I hope that by September of this year we'll have a much reduced debt in the company.
Himanshu, also if you can help me understand the financials of the company, can you throw some light on the kind of numbers with which the company has ended FY17 with?
I cannot comment on the numbers of FY17. As I said, they are not audited and they are not a part of the RHP. But last year number of the company without the acquisition was 537 crores. And the acquisition at that time in FY16 had done 127 crores of revenue. So if you add the total revenue last year was close to 65 odd crores of the group, which is close to above $100 million last year. And we have been growing organically in the K-12 business at around 18 to 20%, okay, and in the higher education space at around 11%. And total business, if you combine together, we have been growing at around 13.5 to 14%. And we believe the same growth will happen in the in times to come as well without the new acquisitions.
To be specific, in terms of the individual categories of your financials, your revenue has grown between FY12 to FY16 at about 14% CAGR. 40% CAGR. The bottom line has grown at about 16-17%. What is the trajectory which you see going forward in terms of both fronts?
So if you see the top line growth from S. Chand itself, we were 170 odd crore company in 2012, and 2016 with the new acquisition we reached around 665 crores. So that's almost a 4 times growth in terms of revenues. And plus our EBITDA was last year, including the new acquisition, was approximately 172 odd crores last year was the EBITDA of the company, and that has been in line with the company. And we believe that the EBITDA was around 26.4%, including the new acquisition on a pro forma basis. And we believe that in the next 2 to 3 years, we will be growing this EBITDA by 200 to 300 basis points, okay, and come at a line of 28 to 29% at a corporate group level EBITDA.